All right, welcome back to another episode of the Black Bullion Show. We've got another great metric for you guys to take a look at and consider when watching for gold's move upwards. Now, this little tool actually signaled the market top in 2007 and the bottom in 2009. It also went haywire earlier this year when the Ronies first grabbed our attention. So what metric am I talking about? Find out shortly. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. So before we talk about this metric's relationship with gold, let's first talk about its relationship with the economy. This signal is raising a red flag for the stock market rally. So let's get started here. The VIX index is raising a red flag for the stock market rally, flashing a warning signal that predicted the 2007 market top, according to former hedge fund investor Jesse Felder. The author of the popular Felder Report financial blog said that typically the stock market and expected volatility indicated by the VIX index should move in opposite directions. Any divergence from this, which Felder said has now appeared, can signal an impending reversal. The 2007 stock market top and the 2009 market bottom were both defined by a divergence between the S&P 500 index and the VIX, he said. Since then, we had several bearish non-confirmations that warned of significant corrections. Today, we have another bearish non-confirmation, the Bear Stearns alumnus said. So take a look at this graph here. This is the S&P 500, but this is the VIX inverted. Now it's inverted likely because it would cross over this graph here as it would have gone up, but since it's inverted, it's going down. So this is the VIX here. So whenever it's in parallel motion with the S&P, you may start worrying a little bit. Now, let's continue here. The 10-day correlation between the S&P 500 index and the VIX has risen into positive territory, which Felder said can serve as an effective short-term sell signal. Right now, this VIX warning signal is flashing again, as it did earlier this year and prior to the corrections in the first and fourth quarter of 2018, he said. In short, the options market is sending a message that volatility going forward is likely to be greater than the stock market currently implies. And history shows the options market is usually the only that wins this sort of argument, he added. Now here's a little extra here. If this chart from Goldman Sachs is anything to go by, then the US dollar bear market may have some way to run, Rebecca portfolio manager Jeroen Blokland noted. He said there have only been 3 US dollar bull markets and 2 bear markets since the 1970s. So apparently this guy is seeing that there might be some more room for the dollar to drop, and honestly, we have recently seen the dollar get back into the 91s in the DXY. So that's pretty interesting to note. So that little bit at the end was an extra just to show, everybody what could happen with the dollar. But the VIX and the stock market both being elevated is not a good thing for those who are in equities. It's a warning sign that things may be running hot. So where are we today with the VIX? So let's see here. Currently, we're at 26.03. Now we're starting to see a slight uptick here, but at this moment, I wouldn't sound the alarm just yet. Why? Well, if we take a look at this graph here, this is year to date. Yes, the VIX has gone up slightly in recent days, but it hasn't peaked above the more recent spike that we saw here in June when it was at 40.6 0.79. Now, that doesn't mean we shouldn't pay attention to the VIX, but in conjunction with the slowdown in equities and deeper moves into the 10-year, this uptick in the VIX may be a bit different this time around, just given all that's kind of happening behind the scenes. Again, with what's happening in the bond market and more. Now, I'll be monitoring this metric in the coming weeks, so we'll talk about this as time goes on. So guys, let me know what you think about the VIX. It nearly got as high as it did in 08 this year, back in March. But, you know, gold dropped actually significantly during that time as people were rushing into dollars. Now that the dollar is declining, do you think that the same thing would happen if the VIX spikes? So ponder that question. Let me know what you think in the comment section below. Thanks again for watching. Please hit the like button. Please subscribe if you're new. It's Black Bullion.